Another great thing to take a look at, aside from charitable giving and things like that, is if you have a child, you may want to set some money aside for the child as well, either for college using a 529 plan, or something along those lines. And what that'll help doing as well is you can not only write off those contributions as a tax deduction, but you're also going to be using that money tax free when it comes out for those qualified expenses such as school. Now, another great way to kind of mitigate or to work around the current taxes of a high net individual would be something along the lines of like a permanent life insurance policy. So what a lot of people like to do is like to fund a permanent life insurance policy, and that actually creates a cash account within that life insurance policy. And what you're able to do is you're able to borrow money from yourself, essentially, from that insurance policy tax free. Now, you are technically having to pay that back, but let's say something happens, another 2008, and you just need those funds. You can take that money out of the cash portion of your life insurance policy tax free, and you don't ever actually have to pay it back. It will just lower the amount of death benefit that you get when you perish. So another great way to kind of work around and use the current tax laws to our advantages.
So you mentioned another 2008. In your professional opinion, should we be concerned here? I mean, is that on the horizon anytime soon? I don't know. That was a scary time.
Well, there's a lot of things going on right now. We have the BRICS coming out with a new currency that may affect our oil markets. There are a lot of unforeseen things going on. The commercial real estate market is also not doing so well. So we're kind of at a spot right now where I feel like anything can kind of tip us over the edge, right? So that's why it's so important to not plan to think, oh, maybe something's going to happen. Just kind of plan that as if something is going to happen, right? We see historically that the stock market will take a huge plunge every 10 years, right? So it's inevitable, these cycles that we go through, these economic cycles, and there's new information coming in at all times. And what really is the most important thing, what you can control, is not the volatility in the market, but the volatility that you're taking within your portfolio. And that's why risk management is so important when you're talking about building and managing a portfolio. So we can't control anything else. But the only things that we can control is how much risk you're taking within the world that we live in. Hey guys, thanks for watching this video. If anything that you saw resonates with you, please feel free to email me, tyler.johnson@raymondjames.com, or feel free to DM me. I look forward to speaking with you.